Hello, my name is Jason Mercer. I'm the Toronto Real Estate Board's Senior Manager of Market Analysis. I'd like to take a few minutes of your time to go through our most recent economic and commercial real estate update. In April 2011, we saw over 800,000 square feet of industrial, commercial, and retail space leased in the Greater Toronto Area. This was down by about 27% in comparison to April 2010, when we saw over 1.1 million square feet of space leased. So while we have seen a bit of a dip over the last few months in commercial real estate transactions, the outlook is quite promising moving forward through 2011 and into 2012. So let's start with the consumer-driven side of the economy first. The employment level in the Greater Toronto Area has trended steadily upwards since the second half of 2009. And in fact, we're continuing to see the employment level above the pre-recession peak. And this means that the unemployment rate in the GTA has trended lower, which means the labor market has tightened up. And when we see tightening labor market conditions, the average growth in wages and salary accelerates. And that's definitely what's taken place over the last 6 to 7 months. We've seen the average worker's wage increase at or above the rate of inflation. And that obviously feeds through into consumer confidence. If people are confident that their employment is going to be sustained, if they're confident that their wages and salaries are going to be growing at a rate at or above inflation, then they're going to be more confident in purchasing goods and services at retail stores, that one segment of the commercial real estate market. But it's also important to think about the manufacturing or goods production side of the market, especially what's pointed towards the export market, both in the United States and other countries around the world. And in this marketplace, we certainly have seen manufacturing shipments increase since the second half of 2009, but we haven't yet surpassed the pre-recession peak. And a lot of that has to do with the fact that exports, while increasing over the last year to year and a half, also haven't reached that pre-recession peak. And that really points to the fact, or how important export-related goods and service production is to the economy in South Central Ontario. So the general consensus is that we should expect continued growth in exports, and by extension, continued growth in manufacturing in Canada-wide and funneling down into the Greater Toronto Area. So as we think about the direction of the commercial real estate market, both through the remainder of 2011 and into 2012, a lot of that will be tied to the continued growth in manufacturing, the continued growth in exports over the next year to year and a half. Thank you very much for your time today, and I look forward to speaking with you again next month when we'll do a further economic and commercial real estate update.
Brought to you by GTA Realtors.